Buying a home is a big financial decision, so it is relatively important to have a clear understanding of what your borrowing power looks like before you begin to start shopping around for a mortgage. With the growing number of online tools, it is now easier than ever to accurately estimate how much money you're going to be able to borrow based on a few factors, being things like your income, your expenses, and a few other financial ones which I might go through today. And in this video, I'm going to be taking you through one of those tools that I have come across and I think it's pretty useful. But first, just quickly, welcome back to my channel. My name is Reese and this website right here is called My Future Home, an all-in-one borrowing, mortgage, and house purchase calculator. This tool can be used to estimate the total value of a house you may be able to buy based on the amount you may be able to borrow plus your deposit. It provides information on the fees and other costs associated with purchasing a home and estimates your likely mortgage repayments and remaining income left over. The amount of money a bank is going to be willing to lend you is ultimately up to their discretion, but they will look at factors such as your income after expenses and what your loan repayments are going to be. The bank will then use this figure to calculate how large of a loan you can actually service depending on current interest rates, plus a serviceability buffer, which is currently controlled by APRA, sitting at around about 3%. I've actually made a video on this topic, gone into a bit of depth about it. I highly encourage you to understand what it is and why banks use it and how it can alter your ability to borrow money depending on how much you earn and how much you have saved ready for a deposit. And I've left a link down in the description below, so feel free to go and quickly give that a watch if you are in the market to purchase a property and are trying to understand more about how this all works. And just as a quick side note as well, before we start punching numbers into the tool, just understand that if you have a credit card, a bank will usually assess your loan application as if that credit card was fully utilized and you were only paying a very small portion back each month. They do it as kind of a worst case scenario. So now that we have that covered, let's go through two quick examples of how the calculator can be used and how beneficial its outputs can be. So for this first example, I'm going to treat it as if I was looking to purchase my first house to live in and that I have no other properties. So this loan is going to be just for me. I have no dependents. Let's say I earn a respectable $100,000 per year, not including super. Let's say that the property type will be an existing property in the state that I live in, being South Australia. Now, as I mentioned, this is going to be my first home that I also intend to live in. And the reason why I'm giving some exposition here is because there are two drop-down options with the same title, being live-in options. And I'm assuming that these two options exist because in Australia, there is something known as the First Home Owners Buyer Grant, and one of these is going to be factored in for that. I've actually also made a video on this topic and I've linked it down in the description below. It's one of my older videos, so the quality of it isn't going to be all that hot, but the content is still relatively relevant. Moving on to the last section here, which is section 3, being expenses. For bills and living, I'm going to say that I need at least $2,000 per month. My current loan repayments will be 0, as this is my first property, and let's say I have a credit card with a limit of $5,000 on it. So at the time of recording this video, at an interest rate of about 5.5% on a 30-year mortgage, I would be eligible to purchase this sum of money for my first property. And it really does break down some of the important considerations that need to be made. To avoid paying lenders mortgage insurance, also known as LMI, just as one example, I would need to save a deposit of about 20%. This calculator here does that for me. There's no manual calculation required. If I scroll down a bit further, you will see a breakdown of the savings needed to make this purchase a reality as well. It includes the deposit, stamp duty, transfer of land, conveyancing fees, registration of mortgage, discharge of mortgage, bank settlement, loan establishment, and LMI if I needed to pay it. Now, based on the set interest rate, it also shows you the expected mortgage repayments and the amount of money you'd be left over with after you pay all of your bills each month, which is calculated off of your income. Now, like I mentioned just before, I'm going to go through two quick examples. So let's wipe the slate clean and start again for the second one. Let's say it's a couple with one child who make a respectable $140,000 a year, as well as $100,000 a year, not including super. Let's say that they are going to build new, still in South Australia, and this will be a second home, so we will choose the other live-in option from the drop-down options. Let's say their bills are $3,000 a month and their current loan repayments are $2,000 per month on the first property, and let's say they also have a credit card limit of $10,000. Now, That's a lot of info that's going to be factored into this calculation, and the output shows us that they would most likely be able to purchase a property roughly up to this amount. And then, just as before, the simple breakdown of all of this information can be seen below. In my opinion, this tool can be quite handy, as it is probably worth utilizing before approaching a bank to see how much money you can actually borrow in a formal setting. Realistically, using this tool should give you some confidence in where you're sitting if you're thinking about purchasing a property, and it requires very minimal input, whereas a bank going through this process is going to require copious amounts of information to get that calculation as accurate as possible. And that's good on them because, borrowing hundreds of thousands of dollars, if not millions of dollars, is something that you absolutely want to be as sure as you possibly can that the person taking that money from you is going to be able to pay it back. So like I said, use this as a guide. Start there, and the bonus of it is that it only takes a few minutes to fill out, which is super handy. That is pretty much all I have for you today. I've left a link to the website down in the description below. Hopefully you found this video useful. If you did, please hit that like and subscribe button down below. It really does help the channel grow, and I really do appreciate the support. And that's where I'm going to leave you. So have a good day, have a good week. And as always, I will see you in the next one. Bye for now.